All right, my name is Wall, and today we're going to go over the basics of what a footprint chart is and the key terminologies that we're going to use in order flow trading so we can have a common language to better communicate with each other. On the right-hand side of my chart, you can see your standard Japanese candlestick chart, which retail traders all use, thinking that they can make an informed decision on the market behavior and where it's going to go utilizing this. On the right-hand side, we have a footprint chart where you can see every single buyer and seller in the market, where they're buying and selling, exactly how much they're buying and selling to make informed decisions on where you can execute your trades and when to execute your trades. So let's go over some of the basics of the footprint chart. Here you can see on the left-hand side a lot of red bars and blue bars. Red being delta, selling delta, blue being buying delta. What does that mean? So red delta means this is how many more sellers there are than buyers, aggressive sellers, and how many more aggressive buyers there are than sellers. On the right-hand side, we can see gray bars. These gray bars signify the amount of volume being transacted in this candle. Next, we can zoom in on this chart to really see the actual numbers being transacted. You can see 50 contracts got traded, or 50 more sellers were there, and there's 64 contracts traded altogether, meaning only 14 buyers to 50 sellers. So you have 50 negative delta. You have purple numbers over here, which signifies a completed auction. A completed auction is when not a single order got transacted by the other side, the other party. And most likely, when you see that, you do not expect price to go over that price zone anymore or transact there anymore because no one's interested in transacting. So now we have absorption. So what is absorption? Is when you have a lot of buying or selling, but price closes in the other direction. So you can see a lot of buying occurred up here, but price closed lower. So this is absorption. Absorption by a passive seller. A lot of people are buying, but there's a large player. Large players tend to act on pending orders, limit orders, not market execution orders. So he is building a position, a sell position up here. These people are all buying it, but he's sitting there with so many sell orders, such a large position, that he absorbs all the buyers and price goes down. And then we have another terminology called imbalance. An imbalance is where you have a heavy one-sided difference between the market buyers and sellers, where one side completely takes over. So over here, we have a heavy imbalance of sellers, like ton of sellers, just no buyers. You get an imbalance. You have a little imbalance here signified by this blue box. All right. And then lastly, we have this yellow line in here, which is called the bar POC, which is just the highest amount of volume, the point of control, bar POC, the highest amount of volume within this candle. All right, so now let's go over how we can read this chart and make some decisions. So New York Stock Exchange opened is this blue box over here, this whole region. All right, so it lines up over here. So you might see on the right-hand side a doji candle beforehand. A lot of retail traders will probably look at that and think to themselves, we have this big push down. We have a doji, price is probably going to retrace, fill the gap, FVG, whatever they want to call it. I don't care. But a lot of retail traders would probably try to buy that, looking for the gap fill. Well, they would call this a gap, which it's not actually a gap. A gap being actually no orders are transacted at all. And then on the left-hand side, we're going to utilize our footprint chart to make an informed decision on how we can trade this. All right. So market opens up. We see a heavy amount of selling delta. And you can see the amount of volume. Almost all the volume is sellers. Now, we know the market doesn't move in a single direction. It'll pull back. So on the pullback, what do we start to see? We start to see buyers and sellers, but very little buying as price is going up. Very little buying, a little bit here, very little buying, and then a large amount of buying right here at the highs. So we can see to the left-hand side, we have an imbalance of sellers. A ton of sellers were here. We went into this imbalance. And what did we get? We got absorption, 99. So 99 more buyers than sellers in this candle, but price closed down here at the lows. So we know that a lot of sellers were sitting here before, a lot of sellers took control of the market here earlier. Price went up, came up to the same price point, and all the buyers got absorbed by a passive seller. So we know that people are still selling it right here at this key level, which you would never see on the candlestick chart. Now, you can zoom in and start to see that, oh, not too much. Okay, we have a large amount of volume up here, low volume here. So as price enters into this low volume area, we would expect that price would not trade above this seller that's sitting here. So we can place our stop loss here. And we know that this area has low volume, so not many orders are going to get transacted here. So most likely price does not want to transact here. So we would take a sell as price enters into this area, or if you're very conservative, you could enter like right up here at the highs of this cluster to try to enter with that seller. But problem with entering with this seller here is he's probably already loaded up all his contracts and price probably won't go back there anymore. So we enter a sell here and we target new lows as the market should continue lower because we know that large market moving sellers are here. What does price do? It comes back, fills your order with a very small amount of drawdown, just a few ticks, and price never goes above here, and price goes to make a new low and continue lower. Now let's zoom into this candle a bit, this candle that we entered on, which would be this one. You can see these purple numbers, completed auction. So what happens? Price comes up. No one wants to trade on the other side of here, and price reverses. So as price comes down, we could actually move our stop loss right there because not a single person wants to trade higher than this price. Same thing happens again, purple, right? Completed auction. Right here, we could move our stop loss right there. And price comes down, breaking down the lows. So basically what we've gone over today, just briefly, is absorption, completed auctions, imbalances where huge amount of sellers or buyers, one or the other, take control of the market, and bar pox. We'll go over this all in way more detail in live trading, in the live streams, in a real-time market, because it's much more challenging to do this real-time in a real market than it is to do it after the fact. And you can ask all your questions in there. All right. So this is just part one. We're going to do a lot more in the live streams in the community.